What is hard money lending? Who borrows hard money? Who lends hard money? And why is it even a thing? I'll cover that and more in today's video. Stick around. If you're interested in the hard money lending business and you haven't subscribed yet, please take a minute, go down and hit the subscription button and the bell icon so you can get notified every time we come out with a new video. Thank you. Hi, my name is Rodney Miller. I'm the owner of Hard Money Partner. I'm a real estate lender, hard money lender in Oklahoma City. I loan in Oklahoma City in the Dallas-Fort Worth Metroplex and other parts of Texas. If you're interested in the hard money lending business, or if you're a borrower trying to figure out how hard money works, or you need a loan, you're at the right place. Stick around. We're going to teach you a little more about hard money. What is hard money lending? Asked that all the time from different people when I talk to them and they don't know anything about the business, or maybe they're not a real estate investor. I explain this over and over again, and it's funny, I've never made a video on it, but I'm explaining to you today, basic terms, what hard money lending is. So hard money lending is very unique in the lending world. It's a very niche industry. It serves a very specific need and customer. Hard money lending is kind of misunderstood. Even bankers and mortgage brokers and real estate investors and borrowers don't really understand hard money. You would think that a banker would understand how hard money works, but most of them don't really understand the details of hard money and how it actually works. So today I'm going to kind of spell that out. For starters, hard money sounds kind of ominous. It sounds, hard. It sounds like it's some kind of loan shark thing, and it's total opposite. Number one, hard money is not hard. It's very easy, and that's why it exists. It's much easier to deal with a hard money lender than a bank on a fix and flip project or whatever. So hard money is very easy, and hard money is not anything nefarious. A funny story is I had a mortgage broker, text me and said that he had a potential customer for me as a woman out of state that had a home here in Oklahoma. And he gave her my number, told her to call me, and gave me her number. And he said she was going to call me. But I never heard from her. And I gave it a few days, and I went ahead and called her because I didn't hear from her. And she said she looked at my website and she saw hard money in there, and she thought that it was something nefarious or something, not on the up and up. It was some kind of loan sharking thing, because the word hard just kind of throws you off. I don't even know how they came up with that term. So hard money is nothing wrong with it. Hard money is easy money. There's nothing bad about it. It just is what it is. Somehow I got that term hard money. I need to look that up and see where that actual term came from, but it's basically private lending is what it is. It's private people lending money. So we got that out of the way. So hard money is basically bridge debt. It's to get a project from point A to point B. It's very short-term stuff, but it's really a favorite of real estate investors. It's used for fix and flip loans. If you buy a property, you want to fix it up, you want to purchase it, put some money into it, fix it, and then sell it. That's a project. The BRRRR strategy, if you're doing rental properties, you're going to purchase the property with hard money, fix it with hard money, rent it out, and then you're going to refinance the hard money lender out of it, but a short-term strategy. And then every once in a while, we get stuff just for business purposes. Somebody has a piece of property and they have a business and they need to pull some money out of property for a specific business purpose. I'll give you an example. Oklahoma, marijuana is legal here. So we do some marijuana grow operation loans, and they will have a piece of land with some buildings on it. And we'll use that land and building, let them pull some money out. And from what I've learned, they need like 3 growth cycles to get profitable and to get investors interested. So they'll use our money to get their growth cycles through, prove their concept, and then get investor money. And then they take us out of the loan with other private investors. So here are some of the major characteristics of a hard money loan. Hard money lenders do not make consumer loans. So if you live in a house, hard money lender will not loan against that house. Most hard money lenders do not have a license, like a typical mortgage broker. It's a really unregulated space because we're dealing with business owners. We're dealing with fix and flippers, real estate investors, and entrepreneurs. So if you were dealing with somebody living in a house and it's their primary residence, then you'd have to be a mortgage broker, be licensed in I think every state, and take more precautions and do all the correct paperwork. We don't have to deal with that because we are dealing with savvy business owners. So another characteristic of a hard money loan is fast execution. Hard money lenders can close a loan in 2 to 7 days in most instances. And when you're a real estate investor, it's super important because you're trying to buy deals at 50 cents on the dollar, and you got people selling you their house. Well, you got a lot of competition, so you got to come with the best offer. And if you can say you can close this deal in 2 to 7 days, and you basically are a cash buyer, well, you're gonna have a better chance of winning that deal from another investor. So fast execution is key with hard money loans. Hard money loans are short-term loans with a purpose, usually about 6 to 12-month term loans. Most hard money borrowers need to have a clear plan and exit strategy because it's high interest rate money. It's for short-term purposes, but you have to have a purpose with that money. You have to have a plan and a clear exit strategy, how you're going to get out of that loan. Hard money loans are asset-based loans. They're based off the real estate more than they are the borrower. Hard money loans deal more in construction and rehab type projects and deal with a lot of properties in poor condition that are probably not livable in many cases. Hard money loans in most cases are high interest, non-amortizing loans, meaning they're higher interest because we're taking on more risk because we're really going off the real estate, but they're interest only payments. Usually you're not paying down into your loan. You're just paying interest for the 6 months or the 12 months that you hold the money. And hard money loans are usually lower LTV than you would get with a bank because we're not really vetting the borrower as much. We're looking at the real estate, and to protect ourselves, we bring the LTV down to probably 70% of the value of the house, where a bank might go up to 95%. But as you'll learn here in a little while, the banks do that because they are really vetting the borrower. We, as hard money lenders, are vetting the deal in the house or the property. Have you ever used a hard money lender for a project? What was your experience? Would you use the same lender again? Would you use hard money again? I'd like to hear about your experience. Leave a comment below. Thanks. So a lot of people ask me, well, why not just use a bank? And sometimes banks are not an option. Let's talk a little bit about banks and how they're different from hard money lenders. So banks are more borrower-based, not asset-based, meaning they're going to look closer at the borrower and really scrutinize the borrower as opposed to property. So what I mean by that is that a bank might turn you down because your debt to income ratio is off. Like you have a bunch of rental properties. This is a problem with a lot of investors. You get a lot of rental properties and you have good income, but you have a lot of debt, and they don't like that. At a certain point, you hit a wall, and they don't want to loan to you. Your credit might be dinged or something because you have so many rentals and so much debt. So they might not loan to you because of your credit. Banks do not work well with time constraints. The earlier scenario where I talked about trying to get that deal at 50 cents on the dollar as a cash buyer in 7 days, well, bank's not going to get you money in 7 days. Banks take time. They have loan committees. They got to send out for appraisals. Most hard money lenders do appraisals in-house, but banks do not. So banks, if they can get your deal done in 2 weeks, that's a pretty fast deal for a bank, but it usually takes them 30 days to get a deal done. Hard money lenders shine in that area. They're quick. They help you take down deals faster. You can offer cash offers because it basically is cash. Property condition is usually pretty important for a bank when they're underwriting a loan. They want the pretty properties. They want one that's ready to rent out or ready to sell. They don't want the distressed properties. They don't want the property that has the gutted bathroom or, has a hole in the roof or, has no electricity or, that's where hard money lenders shine. We like the distressed properties and we love to loan on the distressed properties. Banks want the pretty properties. Banks aren't crazy about short-term deals. Like, hard money lenders make loans for 6 to 12 months. Banks like the longer term deals, and banks are usually the exit strategy. So they like to get these deals that are pretty, and then they like to put them on long-term debt. And they're not crazy about short-term fix and flip deals. So that's another area where banks might not want to do a short-term deal for you, or they certainly don't want to do them over and over and over again. And that's what hard money lenders specialize in, these short-term fix and flip loans. So basically, banks are nice if you have a turnkey property, it's ready for long-term financing, and you want to amortize loan where it's paying down over 10 or 20 years. They'll give you a higher LTV because they vetted you, they vetted the property is pretty and ready to go, so they'll give you more loan to value. But you'll need to have a decent credit score, and your debt to income will have to meet their ratios. And banks will also shine if you don't have any time constraints. If you're in a hurry to get a loan, the bank's probably not the way to go. hard money is probably the way to go, but banks do not work well with time constraints. That's why they're good for the exit. So just to recap, hard money loans are for fast acquisition, distressed assets, short-term projects with a clear exit strategy. You're going to have to be good with a lower loan to value. You're going to pay a higher interest rate, and the approval will be more based on the asset, the house or the commercial property, than it will be on you, the borrower. Bank loans, on the other hand, are good for turnkey assets that are ready to go, long-term financing with lower interest rates, the cash flow. You're going to get a higher LTV. Banks are good if you don't have any time constraints and don't need to close a deal fast. And banks are going to be more borrower-centric. So if you are a good borrower and you have good credit and good debt-to-income ratios, banks are definitely going to shine in that area. One last point I want to make is that hard money lending is a niche business. It serves a really specific purpose for real estate investors and entrepreneurs. And hard money lending is also known as private lending. So hard money lending, private lending is kind of the same thing. A hard money lender can be your Uncle Bob, or it can be a 100-employee large firm, national firm that loans all across the country, or anything in between. So hopefully you understand the basic concepts of hard money lending, why it's used, who uses it, who makes the hard money loans, and how it compares to bank lending. Hey, thanks for watching. We have a ton of free stuff below. Borrowers, get your free reports below. How to flip a house, how to guarantee a hard money loan. Check the links below. If you have a property you want us to look at, just click on the link and fill out the form, and we'll get to you right away and get you a loan quote. For investors, if you're interested in investing in some hard money loans, get down there and get our co-investor brochure. It kind of explains our investor program. Now, if you enjoyed this content, you might want to watch another video that I did not too long ago, how I underwrite loans, where I go into detail on how I analyze and underwrite a typical hard money loan. And please like and subscribe. Until next time, Rodney Miller, Hard Money Partner.